Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. If you're a regular follower of this report, then you'll know I leave my lines on the chart from week to week so you can see how the forecast worked out. And right here, that's the line that I drew last Friday. And as we have not yet hit that target, what I'm going to do this week is I'm just going to move it right on over because there's still an open gap below the market that more or less correlates to this 20-period moving average, which is the blue line. Now, before I get into the details of this particular chart, let me just say that when I'm making a forecast, I'm following the technical signals in such a way that I'm focusing more on the risk management than anything else. So what does that mean? Well, I notice a lot of the comments that come in from the folks who are either taking a long or short position based on these reports. If you have a long position, let's say, I'm just using this as an example, and I'm calling for a down market, then what does that mean for the person who's long? Well, it means protect against the possible downturn in the market. If it goes up from there and does not go down, then there's absolutely no harm done to those who are protecting the downside. In fact, you'll continue to make money on the way up. Now, with that said, I'm also looking at what's happening on the wider time frame. In particular, look at the monthly chart. I pointed this out last week. This is known as a megaphone top or a broadening top. And we can see down at the very bottom, I'm leaving that line in there, we had a higher high this week, but we're having lower highs on this particular indicator, which is known as the CCI. It's known as a negative divergence. So if we think the market's going to pull back, we most definitely want to protect ourselves. And for the option traders out there, that also could mean to you that you might want to position in bearish strategies. It might be diagonal calendar spreads with puts or vertical put spreads or credit call spreads, whatever it may be. I just threw a bunch out there. But there is a lot of money to be made in this market as long as you're focusing on risk management and keeping your eye on the charts. So again, going back to the daily chart right here, as I zoom in, I'm just taking that line right there and I'm going to duplicate it and I'm going to move it on over just like that. And I still think that the gap below the market will fill, and we'll have to see what happens there. Now, next week, we have Thanksgiving. We're going to have a light trading week. We might have light volume. All the more reason to protect yourself, because a lot of times in thinly traded markets, we tend to see a lot of more volatility, especially in the week after the monthly expiration for the options, which was today as I record this. So again, that's my forecast for the diamonds. If you look down below, the stochastics oscillator is accelerating to the downside, and the CCI, as I magnify that, is just a hair away from crossing below that black line, which is known as the momentum line. Whenever you see prices crossing over that line, you have to pay attention, because that usually means that the trend or move is accelerating in the direction that that indicator is pointing. So again, keep an eye on the downside. Now, if I look at the SPY, this is the S&P 500 ETF. You can see pretty much the same scenario. Well, this one came closer to following my line here in the forecast. This is a 2-week forecast going out now to November 24th. I'm going to leave this in place just like that. I'm not going to do anything to it because, again, just like the diamonds, we see the oscillators accelerating on the way down. Almost the same exact position right there on the CCI, almost ready to cross below that momentum line. And interestingly enough, we have an accelerated volume bar here on a red candle. So when you see a red candle, particularly a red candle that has almost no shadow underneath, what does that mean? It means the sellers remain motivated right up until the close. So it's going to be an interesting market on Monday to see where this market opens, not just the spiders, but the markets across the board. So that's the spiders. Now, inversely related to the S&P is the VIX. And I'm going to leave this line in place as well. Why? Because I believe that the VIX is going to start to move up, and we have the telltale signs of buyers coming in. How do I know that? Well, this is known as a hammer pattern right there. See that long shadow underneath the candle, with the shadow being 1.5 to 2 times the length of the body right there, is telling us that the buyers pushed back from the lows, rallied off from the lows, and closed on the high. Now again, look at the oscillators. Stochastics is starting to accelerate to the upside. CCI crossed actually with a buy signal last week, but it's still trending higher. And we have a wide divergence from this moving average. So my target for the VIX right there at 29.29 is closer to December 1st. And that would also coincide with the moving average, which is that blue line. We have a stretch from that moving average. Most likely we'll start to see a snapback to it. Now, let's take a look at the tech sector, known as the Qs right there. It's the ETF that monitors the NASDAQ 100. And you can see that right there, we have what's known as a bearish harami. What's a bearish harami? Well, that term comes from the Japanese translation of pregnant. That's a pregnant candle. And you have the smaller bodied red candle falling within the former green body. Now, why is this an interesting pattern to me? Because yesterday, on Thursday, the 19th, we had a bullish engulfing pattern. So now we have a bearish pattern overriding a bullish pattern. And what that means is that that could be a failed bullish engulfing pattern. You don't see that too often, actually. It's very rare that that happens. But my forecast from last week was almost spot on here. I did say early in the week the Qs would most likely go up before pulling back. We are seeing that pullback. What I'm going to do is extend that out just a little bit, just like this, into next week, because I think we could pull back to that 20-period moving average. Now remember, as I erase this line, there is still a gap below the market here. You have to keep an eye on that because gaps tend to act as price magnets. All right, so we have the oscillators pointing down. We have a gap below the market. We have a bearish pattern right there. Again, watch out below, protect against that downside risk. Now looking at the IWM, which is the Russell 2000 ETF, this one held up the best out of all the major markets, and it did not pull back, at least not yet. I'm going to keep this exactly in place. I'm just going to move it on over, just like this. Watch. I'm going to duplicate that line, move it on over. I'm going to duplicate this line, move that on over as well. And I'm still going to say that's going to bounce off of this moving average, so I'm going to have to extend that a little bit. Let me just clean that up because I just made a mess of that, actually. And so I'm going to say that over longer term right there, we're going to see a pullback to fill that gap as well on the Russell 2000. Supporting evidence of that is the cross right there. As I magnify that, that is a sell signal on the stochastics. And just the other day on this bearish engulfing pattern, see that big red candle engulfing the previous green candle, that is showing a sell signal right there. What we have to watch for on the Russell is a possible cross below that momentum line, which would then accelerate the selling pressure and possibly push it down to fill that gap entirely. If you like what you've seen today, please click on the like button. I ask that every week because you're doing us all a favor. The more people who subscribe to this channel, the more who get to learn about the signals and the more accurate the signals become. Again, everyone benefits from that. If you'd like to subscribe, go right ahead. But if you'd like to be alerted when this is put out, just click on that little notification bell and you will get that notification that the video is ready to go. So I try to put these out every Friday evening. Most people actually watch them on a Sunday. I noticed the number of views really increased dramatically on a Sunday. But again, share it with your friends, your family, your neighbors, and make sure we're all managing risk in this very difficult time in the market. So thank you very much. Have a great Thanksgiving. So long.